What's going on, everybody? Welcome back to the channel. It's Millennial Trades. So, my trade over the weekend did not go well at all. We're going to talk about it. Before we get into that and how much money I lost on this trade, I do want to talk a little bit about the macroeconomic environment, some of the news that came out, and some of the things that I'm watching and anticipating. So, generally, we're in the downtrend, but it has been a little choppy. You see these big moves down, then we kind of rally. The rallies get shorted and moves back down. On the indexes, like the NASDAQ, for instance, pretty good solid moves to the downside the last couple of days, last couple of weeks. But some of the individual stocks, some of the stocks that I'm trading and looking at, which that might be a fault of mine. I'm looking at maybe the wrong stocks. Not a lot of price action. Very tricky to trade. I mean, you'll see it with the PayPal chart. PayPal has been chopping around right under $70 for about 2 weeks now, with no major movement to the upside or to the downside. So that being said, I'm extremely frustrated. I'm letting it go, right? I'm out of the trade now. I'm all in cash. So I don't have any overnight risk at the moment, but it was extremely frustrating watching this. So the macroeconomic environment, let's actually, I'm going to screen share this. Hopefully this works. Let me know if you guys like the screen shares. Number one is the yield curve inversion, right? This is what the yield curve inversion is. You can see that you have the yield here, and then you have the, the duration of the bonds at the bottom. So it goes all the way from the 1 month to the 30 year. The reason this is called a yield curve inversion is because it's not really supposed to look like that. The curves are supposed to be high, the yields are supposed to be higher on the longer term bonds. Now, what does this mean exactly? Well, this means that, and I think I explained this wrong a couple of weeks ago when I was trying to articulate this. It basically means that investors don't have a lot of hope for the future, right? Investors don't have a lot of hope for the immediate future, right? Because think of it like a dividend stock. When the price goes down, the yield on the dividend, right? Your dividend is going to be more, right? It's better to buy ExxonMobil at $40 than $80 because if you buy it at $40, the dividend is going to be a higher yield on that share, right? So it's the same thing with a bond. And that's the only way that I can explain it and understand it, because for the longest time I had trouble understanding between the price and the yields, because sometimes people talk about the yields going up, so you think, oh, well, the bonds are going up. No, the bond prices are going down when the yields go up. So the fact that the yields are so high on the 3 month, the 6 month, the 1 year, the 2 year, the fact that they're so much higher than the 5 year, 7 year, 10 year, and 20 year, that means investors don't have a lot of hope. They don't want to hold these 6 month bonds, 1 year bonds, 2 year bonds. So the yields are higher because there's more risk. This also indicates, because we've had an overall sell-off in the global bond markets the last couple of days. That's been some of the really big news. German bond yields soaring, which means the prices are coming down. UK bond yields soaring, which means the price is coming down. Same thing here in the US. Multiple different countries are seeing their bond yields go up. So people are selling off bonds. The question is, if people are selling off these bonds, they don't have a lot of hope. We've got the yield curve inversion. Yeah, they're still maybe holding bonds for, the 10 and 20 and 30 year, but not a lot of people want to hold the bonds that are shorter term. Are they going to want to hold stocks, right? If we see the bonds selling off like this, that's my main question. Are we going to see more weakness in the stock market going into 2023? I think we probably will. Unfortunately for me, we didn't get that big move on, at least not so far, the last couple of days of the year here. And I was reading an article, I think it was yesterday. I guess the Santa Claus rally happens after Christmas. The Santa Claus rally, and I didn't know this, right? Because Christmas is over, right? Santa should be back in the North Pole. But the Santa Claus rally is actually the last week, right up before New Year's and 2 days after New Year's. So if we get a rally, that's called the Santa Claus rally, which to me doesn't really make sense because Santa Claus is back at the North Pole. He's not still delivering, right? Is he? I mean, maybe I'm wrong about that. So yes, this rally that we still may get, to see the bonds selling off like this, it kind of does ruin a lot of the hope for that rally. Some of the other news real quick that we'll go over from Trading Economics. U.S. pending home sales fall for the 6th month. So this is the dilemma here in the housing market, is that the overall sales are falling, but the price of the homes is not, right? The price of the homes actually surged. Remember, we talked about this I think it was last week. It was like a home index number or something, but long story short, the prices of the homes are still up. They're even higher, yet we have less sales overall. This is a big problem for the Fed because it kind of does prove the idea that the inflation is very sticky, that this is not transitory, that the Fed still has a lot more work to do when it comes to interest rates to bring the housing market down, to bring the prices down. Even though the overall sales are falling, you still have extremely high prices, overvalued prices. And this obviously is a result of the very expansive monetary policy over the past, let's call it, at least since COVID, but probably before that as well, with the quantitative easing. There's just a lot of money, a lot of cheap money. People are able to borrow money. And so to see these housing prices still high like this, one can only speculate what the Fed is going to say about that at their FOMC meeting in February and what they're going to do about it. The other things I've been watching are commodities, right? If we go to the commodities tab here, commodities all down. Natural gas down 7%. I think natural gas hit like a multi-month low or something. Oil extends retreat. Oil back under $80. So when the commodities are falling, that's not necessarily a good sign if you're short in the stock market. If you're short in the stock market, you want to see commodities going up. And they did not today. A little bit of crypto news. Solana sell-off continues down over 90%. Remember all these clowns that were promoting Solana? There's so many of them. I'm not even going to list them, but the crypto market has completely collapsed. And my hunch, okay, and there's reasons why I think this. I'm not going to get into it right now. But my hunch is that the liquidity issues that FTX faced, I think we're going to see more of that. I think there's a spillover, or there's still some liquidity issues somewhere because of Sam Bankman-Fried or FTX or Alameda, whatever. There are going to be liquidity, and there's probably similar practices as well going on in the broader financial market. I'm not just talking about crypto here. We're talking about potential liquidity crises with the big banks. Let's hope not. But I actually just bought a book, Too Big to Fail by Andrew Sorkin. It's about the 2008 crisis. And I'm reading this because I want to know more about what happened in 2008 to see if, I can kind of put it to my trading or long-term investing and try to figure this out a little bit more. But also I want to see what kind of propaganda are the, elite at CNBC pushing on the American people, right? Because they're in this book, they're really trying to convince us that the banks and the government made the best decisions for Americans. A lot of Americans don't believe that. A lot of Americans think, we just bailed out the big banks just because to help them. There was that scene where they were all coming out, back in 2008, they were all coming out of, some government building, and they were just completely ungrateful. This was after the bill got signed to bail out the banks. They didn't want to talk to the media or anything. But there's other sides to the story, obviously. But the opening line in this book, it goes something like, Jamie Dimon from JP Morgan poured himself a cup of coffee trying to get rid of a headache from a hangover. Okay, so the bankers, I guess in 2008, were living it up. They were drinking and partying while the financial markets were collapsing, and then they got bailed out. So it should be an interesting book. I will incorporate some of my reading material into my videos here, but I'm really trying to read a lot. I'm reading books about Russia and the Orthodox Church. There's a lot of interest that I have, but just to see everything that's going on here, to think about the FOMC meeting, one can only speculate, as I always say, as to what the hell is going to happen in 2023. it's probably going to be a bad year for equities. Could be a bad year for gold too. A lot of people make the argument that the higher the interest rates go, the lower the gold price is going to go. And I hope it does go lower, because I would like to continue buying gold in 2023. I've got goals, not only financial goals, but goals with my process going into 2023 that I'll probably do a video on. Let's talk about my trade. All right. I've stalled long enough. And I hope that macroeconomic news helps, because, this is just what I'm seeing. I'm just trying to figure this stuff out. If I'm way off here, correct me in the comment section down below. I would love to learn. But this is what I'm seeing. And this is why I'm so bearish on the markets. The sticky inflation, the housing market, the fact that inflation, the PCE was actually up 0.5%, and the geopolitical issues and the monetary policy that supposedly they're trying to reverse, right? They're tightening the monetary policy, but we're still seeing the long-lasting effects of endless trillions of dollars being pumped into the system. We're still feeling the effects of that, and the lockdowns too. I was reading the story about a restaurant that was right around the corner from where I grew up called Kirby's, and they closed on October 9th of this year because after the pandemic, the customer base, the guests weren't coming in like they used to be. They couldn't find any help, right? They couldn't keep people employed because nobody wants to work, because I guess everybody's in the market trying to make it with their stimulus checks. But, it's just, oh man, it really looks like a disaster. The American economy, in my opinion, looks like a complete fiasco. Then you've got the situation in Texas, along the border. I mean, it looks like Skid Row in LA, in El Paso. It looks like Skid Row. And this is what most big American cities are going to look like. You're going to have thousands, tens of thousands of people in Los Angeles just stranded, homeless, on the streets. We're going to see this everywhere in America, and they're going to be from other countries too. These aren't just going to be homeless Americans. This is going to be a homeless international community that we're now going to have to deal with, because they won't, they won't fix the immigration process, to keep it politically correct here. So my trade, right? Okay, let's get into this. So this is PayPal. This is the PayPal chart. I lost about $3,500 on this trade. I bought probably on this day. I think this is Friday, right? The 23rd. So I had bought puts, the $67 put, right? Right. We closed at $67.55. But when I bought these, the premiums were a little bit higher. I bought some of the contracts at like 125. I bought some of the contracts at like 100. I just kept going in. Like if I go to the, let's see if I can get the 30-minute chart to load. I think it was this day. I just kept going in. When I saw this candle here too, I thought we'd get this big move. See that tail right there? And it just didn't happen. We have been chopping around, not for 3 days. We've been chopping around. Look, you could literally draw a straight line. I'm going to do it right here. You could draw a straight line through this price action, and we pretty much haven't moved. We're right under about $70. Like I said, we closed at $67.55 today. And, there was this big move here, but then it just popped right back up and kept chopping around. The NASDAQ looks similar, but we did get a little bit of a nicer move on the NASDAQ. Like if I go to NQ, we're going to look at the futures, if they'll load. Okay, they are loading. You can see this price action is a little bit easier to trade, because there's actually, you can actually draw a, all right, my drawing, yeah, here we go. You could actually draw, I need to get more RAM on this computer, guys. You could actually draw a line, and there's a clear downtrend. Right, so maybe I should be trading the futures or trading the option contracts on the futures, because if you compare the NASDAQ to PayPal, and PayPal is a NASDAQ stock, I just got caught up in the wrong stock this last couple of days. Now, I haven't been scalping because I've been watching PayPal. I mean, how do you scalp this? Right, you could scalp it for 30 seconds or so, but if you don't sell it immediately, you're going to be down big. I lost about, let's say, 40% of this trade. The money that I put into this trade, I lost 40% of it, okay? And it really sucks. It really sucks. But I'm really not that upset about it. I really don't care because I still got money in my account. I'm still up big on the year, still up big on the month. So I lost $3,500, right? It doesn't define me as a trader. Yes, the mistakes need to be corrected. I shouldn't be holding, 80 contracts over the weekend. And this is the other thing too. Because I was holding these contracts over Christmas weekend, right? It was very hard for me to actually be in the moment and enjoy Christmas. It was a mistake. I shouldn't have done it. I had like $7,000 in my account because I made a huge deposit on Thursday. It was in my bank account on Friday. I got bills coming up in January and stuff. So I had like $7,000 in my account. Now I've got $4,500, after 3 days or, since Friday. So Friday, let's say Monday we were closed, Tuesday. So over 3 trading days, I lost $3,500. And it was a mistake to hold these contracts over the weekend because it was always in the back of my mind. I couldn't actually enjoy Christmas because I was thinking about this trade. I know that sounds fucked up, but I'm just telling you guys the truth. This is like a trading journal too. Another reason I do these videos is because I don't really like to write much. If I'm going to journal, I like to do it on video. So you guys are getting my trading journal here. And holding those contracts the last couple of days, we opened on Tuesday. I'll go back to the chart. Let's just go back to the daily candle real quick. Check this out. Look, you could draw another straight line through this price action. There's, I guess a little bit of a downtrend, but I had the $67 puts. And if you look at the option chain too, you can see the $67 puts have over 4,000. The open interest is 4,000, almost 5,000, 4,800, right? The open interest right here on the $67 puts. I just got a feeling, man, that we're not going to make it to 67 because there's so many people holding this particular contract. I just cannot take the risk that this is going to bounce or just chop around in a straight line. We also got this big bottoming tail from Thursday, on this green candle here, which indicates a lot of buyers just absorbed this price drop. That was that day where if you look on the 30-minute chart, right, that was this day right here, and buyers just absorbed it, and that's what created that wick, that bottoming wick right there. Long term too, PayPal does not look good. Look at the weekly. The weekly is looking a little sketchy. You've got kind of like this doji bar here. This was looking like a green doji bar earlier today. So yeah, I think I've learned my lesson, honestly. I think I've learned my lesson. I don't really like swing trading. I don't like it. It's great if you're right and you can make a ton of money, but if you're wrong, you can also lose a ton of money. Where if you're scalping and you have the mindset that I got to get out of this trade by 10 o'clock, it's pretty hard to lose thousands of dollars doing that, right? So that's probably what I'm going to focus on moving forward is my scalps. Not a lot of overnight risk. The last thing I'll show you guys chart-wise is the dollar. If we look at the DXY, this was also frustrating because, the NASDAQ had a nice down day and the dollar had a really nice up day. Like, look at the 30-minute chart on the dollar. Look at this. It looked like we were about to sell off completely, and then boom, buyers just absorbed it. People started selling out of other currencies or however this works, and the dollar just kept moving higher all day. Yet, with my $67 strike price puts, we just never made it there. I think the lowest we got. So one more thing too. We came down here. I had a chance to sell down here for like a $1,600 loss. And I did not take it because that big engulfing red candle right here, you're thinking this is going to go lower. But this just goes to show you guys the technical patterns, the technicalities, they really don't measure up at least 50% of the time. I've seen it. I've witnessed it. We came up. It looked like we were going to kind of bounce. The market was bouncing a little bit. You've got the NASDAQ right here soaring right after that first fall. And then we came right back down. The lowest we ever got was 67.30. But like I said, guys, I cannot take the chance that these contracts would expire worthless by Friday. I just couldn't take that chance. So, I took the loss, took the L. It happens. I need to keep these losses a lot smaller. It's good that the losses are infrequent, right? Like my win rate is, I don't know, something probably like 95% or something like that. Like I win almost every single day. But when I take these losses, and I think the last two major losses I've had were this one and the other swing trade. The first swing trade I did back in November, I think, for the CPI report went great. And I think I got a little, big-headed there. So the last two swing trades, I think the other swing trade, I lost like 1,500 or something. I don't think I'm going to swing trade anymore. It's just there's too much risk. And these stocks are so far down, they could bounce at any time for no reason. This is the other thing people don't want to imagine here is that, yes, the interest rates could be going higher. Yes, the terminal rate could be going higher. Yes, inflation might be super sticky. Yes, the housing market prices may not come down for a long time. And this is going to cause, the Fed to be more aggressive with their tightening. All of this is possible. I heard there's wars breaking out in Kosovo right now. So, there's so many risks out there, but these stocks are down so much. Who knows what's going to happen? Are they going to drop another 50% from here? 40%. Jamie Dimon was calling for like another 20% drop in the equities markets about a month ago, going into 2023. I think scalping for me is just what I do best. It's where I shine, and I need to remember that. Like when I want to hold contracts overnight, I need to just like cut my small losses there and just get back into the flow the next day. So that's what I'm going to do, right? I'm all in cash now. I got about $4,500, a little bit over $4,500 in the account. That should be enough. We're going to try to double it. We're going to try and get back to 10K. My goal in January is to obviously double the account, triple the account if possible. I think January we will see a lot more volatility. Yeah, the other thing here is the VIX. This is another problem, guys. Like, look how low the VIX is. The VIX is at like 22. You could draw a straight line through the VIX. Right? Like on the, just no real movement. Just these crazy gap ups, these crazy down days on the VIX. I need the VIX to pop up to like 40, right? That's what I'm hoping for. I hope the VIX goes to 80. I think it did back in 2008 or something. I need this volatility to go up. And I think in January it will. So I'm hoping to be able to scalp some quick moves here and there. I'll do a whole nother video about my goals, exactly like my trading goals, my financial goals. But the main thing is just trying to scalp, double the account, not spend so much money because I have been spending a lot of money this year. I needed upgrades, right? I needed phone, I needed clothes, I needed jewelry, right? We need things. But going into 2023, we're going to be a lot more frugal. So I'll leave it there, guys. You guys let me know what you think in the comment section down below. Follow me on Instagram @MillennialTrades. And as always, until next time, I'll see you on the next video.